Hey, are you thinking about buying or selling a business? Join us May 3rd for the M&A Launchpad Conference. This is the premier conference for entrepreneurs, investors, navigating mergers and acquisitions in the lower middle market. You're going to connect with top deal makers, gain insight strategies to take your business search and your business acquisitions to the next level. So get your tickets now at malaunchpad.com and use the code LAUNCH for $200 off your ticket. We're looking forward to seeing you.
On today's episode, we interviewed Dustin Carreon, where we really dived into what it looks like to kind of transition from a small family-owned business to going and buying your business and starting to build together a HoldCo strategy, right? Around how do I start to go find businesses, buy the businesses, maybe make some of those mistakes early on with smaller businesses, and then grow into that, right? And build this kind of a repeatable model to go scale and grow into more of a conglomerate. So Casey, what were some of your takeaways?
Yeah, I feel like we always have to put a label on something. Is it an independent sponsor? Is it this? I think what we would name this is a self-funded HoldCo strategy. Unbelievable.
Forgot to add the word AI on that.
With AI, right? But at the end of the day, it's one of those ways to think about it, right? Compounded interest by investing in businesses that are yours, starting with some cash flow, investing, going small, building up, and getting to the point where you make a larger acquisition. Peeling off the real estate, building your own little real estate empire off the businesses that are paying for it. I mean, it is a really cool way to look at it. And, when you have a role model or thinking about it through Berkshire Hathaway's mentality, you got yourself a good opportunity. So Great podcast.
No, and I love Dustin's just kind of very straightforward linear thinking, right? It shows that it's not easy to do this, but it's doable. Right. Yep. Dustin kind of mentions he dropped out of school. He made a lot of mistakes, but again, he's still very successful, made a lot of good, smart business decisions, and that's allowed him to kind of build up to where he is today. So
absolutely.
Lots of good nuggets on this one.
Hey guys, go ahead and just pause the podcast for a second. When you're buying a business, you need to ensure the financial health of the company. The quality of earnings is mission critical. It doesn't matter what size business you're buying. Patrick O'Connell Advisory Group, they're dynamic. They do a great job. They're going to look over your shoulder. They're going to make sure that you're doing the right thing. And this guy's done over 200 buyers successfully, just like you. So reach out to him. And it's O'ConnellAdvisoryGroup.com. Click the link in our show notes. Can't live without this.
Hey, Dustin, welcome to the show.
Thanks for having me, guys.
You bet, man. So we were kind of debriefing a little bit before we went on live, right? And kind of talking a little bit about you, your businesses. And so for those listeners, right, I think today we're going to talk about HoldCos and how to maybe stumble into your first business, right? And then kind of get that bug of really scaling out and going from there.
Yeah, it's always a big question we get constantly is, hey, how do I buy another company, right? Because we have a lot of people that listen to our podcast or come to our conferences who bought a business, maybe not a big business. They've made it successful. They've got it into a position. And now they're like, hey, I could do this again. And I don't want to sell. I don't want to exit. I'm not in the business of, the traditional private equity. I buy 5-7 years, flip and get out of it. I want to buy and hold and create great businesses. So Dustin, it sounds like that's been your philosophy. So why don't you tell our audience a little bit more about your story?
Yeah. I mean, just to kind of touch on the HoldCo, it's funny because it is a big thing. And I'm so glad that you have people within your ecosystem that are interested in that, because I get asked that a lot. And for me, it was just a simple way of just trying to think about what is it that I want to do in the future as far as buying businesses. It just helped me organize because I'm just kind of a clutter, right? And anyways, I started just a little bit about my background because I think it just really ties into like where I'm at today. So I grew up, speaking about clutter, I grew up with a father that was in the scrap metal business. So
wow, cool.
So was in a garbage truck with him. He had like a garbage route. I don't even know how the hell he got that. Somebody owed him money and he literally inherited like a garbage truck. It's a true story. So we started going around to these neighborhoods like in Orange County out here, Southern California, picking up trash, and I loved it. So it was through that like hustle, the treasure hunt of, oh my gosh, every day when I wake up, I'm going to find something new, that kind of attracted me to business. Buy cheap, sell high. And my dad was a very firm believer because he had some bad experiences with partnerships as far as being an entrepreneur. He worked for companies and then he worked for himself, but he got burned a lot. So he was very big on being small, having one or two employees, doing everything yourself, having your own truck, having everything in your own name so nobody could take that away from you. And, being an entrepreneur is entirely different than that, right? Because you're taking a lot of risk. In order to grow, you need to hire people. You need to do these things that are very contrary from sometimes what we're told when we're young or what we learn in school. So from that point on, as a teenager, I started to get in a lot of trouble. I dropped out of school at a young age. I don't have the traditional background. Talk about what I do today, what we do. It's different. There's nothing wrong with that. Everybody has a different path, but I didn't go to college. I got in a lot of trouble. But when I got out of the juvenile institutions, got my life together, I was like, Dad, I want to get back into the scrap metal business. I want to do the right thing. I want to be responsible. And it was at that time that, long story short, the scrap business started to turn into electronic recycling parts, right?
Oh, good business there.
Right. So inside of electronics, old computers has gold, metals, precious metals, zinc, not zinc, but platinum and all that. And that became a business. And it was within that business, that I started getting into electronic parts, chips. We all talk about chips, but it was a big thing back then in the 90s and early 2000s. So I learned that business by mistake. Okay, this was nothing that I planned to do. It was just something that happened. And what happened was from there, I went to my dad and said, look, I don't know what the hell I'm doing. Let's start a chip business. Okay, completely different from the recycling, because in the recycling business, you're selling chips that are going inside of computers. And then there's my dad had contaminated radioactive cobalt bricks. And it's you can't have that next to chips. So we moved out of there. And long story short, I started freelance electronics in the late 90s. My dad being my 50% partner. I signed a 6 month lease because I didn't want to sign a year lease because I knew it was going to fail. But I had to do it. I had to try it because there was potential. The chip business was going crazy. Had no idea what I was doing. And from that point on, guys, it started to grow. We grew from, back then, a few $100,000 in sales for the two companies, which was a lot of money back then. Grew it to, $1 million, $1.5 million to a couple $1 million within 5 years. So that was a big deal back then. And honestly, at that point, from that point on, all the way up to the next 10 or 15 years, I thought that I loved this business so much because it was still like a treasure hunt. Even though we're selling brand new chips and semiconductors, it was different every day. We were going out there and buying deals, meaning we were going to other manufacturers, other distributors, companies that were going out of business, companies that were liquidating, obsolete material, and paying 5 to 10 cents in the dollar, speculating on it. It's a commodity business when you really think about it, holding it and then selling it for 50 to 20 times what it's worth 5 or 10 years later. And I thought to myself, I love this. I understand it. I don't know a lot of things. I could do this for the rest of my life. And I would have been content just by staying there unless the business didn't start going through some changes later on.
And really quick, so just to maybe figure out how to tie it together. So you went from, really the junkyard business to the chip recycling business to then chip distributions. And it wasn't that you were taking recycled chips and selling those. It was actually brand new chips, or was it a little bit of both? And kind of did one segue to the other?
Yeah, definitely the recycled chips segue to the new chips. And the new chips, we were either buying them from other distributors, like authorized distributors, like the big, Arrow, Avnet, Moussa, or we were buying them from other companies that had surplus. So it's what they call new and a used surplus. So they were new, but they were kind of I wouldn't call it black market, but it was kind of a secondary market, because if you guys, those of us who do manufacturing understand, a lot of times when you design something, it was designed 10 years ago. It takes that long for something to get approved on the manufacturing chain. And then all of a sudden, by the time they go into production, half of those chips or parts are obsolete. So then they come to people like us who will find them.
So this is great. So I had a great opportunity. My best friend started a company with a group of guys. This was 20 plus years ago, called Tech Savers. And they noticed that Cisco, right, when people bought their hardware gear, Cisco didn't have a return policy. So when everybody would buy, so they ended up taking the returns, and they created a market for it. So it sounds very similar to what you've done, is that you're recycling, you're seeing these chips, you're doing this stuff, and then you realize like there's a market to be able to take these manufactured products that didn't have a market, and you created a market for it.
Yeah.
And is your market still happening?
Yeah,
Is there still a market?
was it to the retail hobbyist, or were you selling them in bulk to essentially other manufacturers that are assembling some sort of product?
Yeah, so great question. So what would happen, here's an example to hopefully answer part of that question. So it's a little bit of both, but it's mainly manufacturers and other brokers and distributors who are working for those manufacturers. So here's a little bit of both. We would go in for auctions to some of the local in Southern California, because this was the hub. Burbank, the Valley, even parts of LA was the hub of defense contracting back in the day, right? So a lot of those companies were downsizing. They would have auctions and say, we're getting rid of our spare parts. Because a lot of times they have spare parts or surplus that they have to hold on for their contracts. So they would call us in, and we would buy it, right? We would bid against other guys like myself, and we would go, oh, there's 5 pallets. Here's, I'll give you $1,000. 6 months later, we would get a call from a procurement officer or a purchasing agent from one of those companies. So it could be like a Lockheed or Northrop, or it could be literally somebody on an aircraft carrier that Northrop did a contract for that ship. And they're saying, hey, 6 months ago, you bought in an auction some of these parts. We need that. We didn't think we needed it then, but we need it now. We need to buy it back from you. So a lot of times the parts that you're buying that are either obsolete or surplus are being reused again. So a lot of times it's manufacturers. And look, to kind of sum it up, like what really happened, right? It's the business is still there. It's not quite what it used to be. It's very profitable still, but it's very small. Mm-hmm. And in that business is what launched what I'm doing today. Because what happened, guys, where I kind of got to where I'm at today was that your business is only good as the material that you're buying in, right? It's a different type of business in a sense where some businesses, we all know this, right? What drives other businesses, right? Some of it is getting leads, it's marketing, it's outbound calls, it's, service calls, if you're in the HVAC business, contracts, whatever it is. For our business, it was about buying new deals. And the thing was that buying deals on the secondary market was starting to get not also competitive, but very hard to find because of manufacturing going overseas. And in order for me to sustain that, I would have came to the point where I would have had to invest a lot more capital into either expanding, getting more salespeople, and becoming more of a traditional distributor, where you need labs now because counterfeiting became a real big problem. Therefore, we would need labs and we need technical people that experience that we didn't have. So I said, look, I could keep doing this for the rest of my life and make a good living, keep my employees employed. I have a brother that came over from my dad's business that we worked together from day one. So I want to take care of the people around me. So we could just keep doing this. This is fine. I can invest a lot of capital into this, or I can just collect the cash flows in this company. Take cash flows from a company like a Berkshire Hathaway did for their dying textile companies. I'll just go ahead and just keep sucking the cash out of the business. I don't need to put it back in. I'm going to invest it. So I'm going to either, try to buy stocks. I'm going to try to buy property. I'm going to do something because I don't want to put it back in this business because I don't know if I'm going to get it out. And that's when I started really like, how did I get into this, right? So I started I started reading books, and I started reading about Berkshire Hathaway and kind of what they did on a huge
story.
scale. Yes. And I
mean, I read that same Berkshire Hathaway, mentality, and it really is one of those amazing stories. And then you also realize that they said that Buffett made like 95% of his money after 50, which people don't really realize that, right? But he has made an unbelievable amount of money.
Yeah. So on your point, when he made 90% after 50, there was a 10-year span within that time from like the late 70s into the early 80s. Where the book value of Berkshire Hathaway or his net worth, whatever you want to call it, like literally, and I may have the exact numbers, I have this written down, but it was like 5 to 10 times what the book value was within 10 years, or something crazy than that, right? And it was just a few key acquisitions that got him to that point, and the reason, and that market at that time in the late 70s crashed, right? So he had buying opportunities, okay? He was buying in a depressed market, whether it was the stock market or companies. And also at that time, he had cash that he was taken away from his dying textile company, which had a lot of assets, but it was undervalued. And again, I am no way saying that, I'm a Buffett, or I want to be Buffett, or I really know what I'm doing. But
I don't think there's anything wrong with that if you do. I think that if there was somebody that you were admiring and wanting to be like, man, Buffett's the guy, right? I mean, it's 100%. I read the book Titan, and it was all about Johnny Rockefeller. And I'm definitely not a Rockefeller. Like, I know that that's not my personality type.
Excited about reading it though.
But when you read it, it gives you this concept of going like, okay, these guys are no different than I was. They got onto a streak, they found the opportunity, and then they used their personality styles to get there, right? And so I think the beauty of a HoldCo mentality, and that is really Berkshire Hathaway, if you were going to execute a HoldCo strategy perfectly, which I'm not saying they did it perfectly, but it's one of the best HoldCo models ever. You picked the right template. You picked the right business plan.
Yeah, it made sense to me because it was something like what's genius about people that are super smart and intelligent and successful like Warren Buffett is they have a way to dumb it down where it's very simple. And to me, that concept was very simple. And that taking money from an asset that is still producing cash but is not sustainable is what I felt like Freelance Electronics, my electronic component company, was. And it was at that point that I read a book, and it was basically like it was before buy and build. It was basically like buying a business for a dummy or an idiot or one of those. And I read it. It was written by a lawyer, and it was very simple. And I'm like, wow, you know what? This is not that complicated. This is kind of what I'm doing without the management piece is when I buy assets or I buy a book of business or I buy, a warehouse with 200 pallets. And I literally did that one time, which is like a business in itself. And looking, trying to figure out, if I buy something, whether it's 200 pallets or a business that has 20, 30 years of business experience with customers and relationships and vendors, that this is also a business within itself. And what is that? Like I learned from Buffett, what if I was to take the cash flows out of the next 10 years from this thing? What if I'm able to sustain this? What is it worth? So value in a company for me, and again, it's not that hard, but I had to figure out what is a business really worth before I'm going to do this? Can I do this? Or is this in my area of competence? What is something that I could really understand, right? What is something that I understand? I know electronics, I know scrap, but I also knew that, I've read a lot of 10Ks and information, about the company's annual reports. And like, there's certain things that I could really understand that are not that complicated. And then there's things that I just like like Warren Buffett talks about, like almost having a list of things that I'm just going to avoid for now because it's just far beyond me. So I started thinking about that. So I literally, around that time, not exactly, but around that time, guys, is when I thought about this HoldCo model. And I put like, Dustin Inc. or something for my name. And and I put underneath the bracket, Freelance Electronics. So that's the company that I already have. I have that company. Okay. And whether it's going to be around or not, that company is going to be, no pun intended, my launchpad. Right?
Love it.
That's why we have the name we have by design.
Yes, it's going to be my launchpad. And from there, I'm going to go ahead and use those cash flows and acquire these businesses. I don't know how I'm going to do it. I don't really have a plan, but I wrote it down. And under Freelance Electronics, I wrote down other companies. And I wrote down some of my competitors' companies. I'm going to buy this company. I'm going to buy that company. And then under bracket number 2 is going to be every company that I think I want to buy. I'm going to own the property for that. So that will be, property 1, property 2, and we'll call this, Carreon, my last name, real estate. And then the third one will be other types of, and again, it's not that it happened exactly that way, but it was a roadmap, a very rough roadmap. It was a vision, and it was something that I said, okay, let's go ahead and do this.
Beautiful. Yeah. What a great story, man. I mean, that is great. And we want to talk into some of the acquisitions.
Yeah.
But one of the things you got to do is you got to buy a Geico, because then you can have all the free cash flow and all the stuff for your investment, right? No, when I literally learned about Buffett, watched, all you got to do is watch his documentary. There's some really good shows on out there, and you're sitting there going like, wow, wow, it wasn't by accident, right? He was looking for ways to get access to more cash, and the insurance business provided him that float. And then that float allowed him to go and acquire more. And so I think we're all kind of looking for where our float is, right? What is that thing that's going to allow us to float some cash to grow? And there's some vehicles out there and there's some things to do, but man, I think Dustin, it's the right path. I think it's the right model, very similar to what at Equity Launchpad. Some people call it an independent sponsor. I think from an independent sponsor side, it's more of like you're trying to be in the private equity space. I mean, I'm talking about more like the capital raising. You're not raising outside capital, right? It sounds like you're using your internal cash to acquire other businesses. And those businesses that you're buying may have some debt. You have SBA, you're using different vehicles, but you're not going out and raising capital. Am I hearing that correctly?
100%. And again, that thinking, that model, which is true, is what I kind of thought about, what am I going to do? How do I see debt? And I think you have to really understand that in the beginning or discover that. Like, what am I? And it all goes back to Buffett and investing and understanding the basic principles of accounting, and compounding, of course, which I definitely want to tie into, is that, what am I really comfortable with? How do I feel about taking on debt, about taking risk? If I do an SBA loan, about personal guarantees? I mean, a lot of us have fears about that. For me, and again, it's different for everybody else, like having nothing to begin with, literally having nothing, like running my dad's business out of an apartment where we have literally barrels inside of the kitchen, right, with scrap metals. Like, there wasn't a lot to lose. So when I talk about risk and a personal guarantee, and instead of going, oh my gosh, why are you guys asking me for these things? This is later on when you start taking loans and stuff. It's like my whole life I've been personal guaranteeing my whole business, right? You put everything on the line. You're not doing this for the money. If you're doing this for the money, and that was the thing, like, I don't want to just flip things. I ran my business like that early on, and for me, I didn't want to just buy something just to get rid of it. It's more of a personality thing. Not to say that I may have to do that and make some decisions, but yeah, going back to your question about capital and money, and some of that sat in from what my dad used to tell me, pay everything. My dad had a scrap dealer. He had a wad of cash like this, right? Pay everything for cash. Don't take on a lot of debt. But I knew I had to do that, right? I knew that there was good debt. I knew that, just the basics, like, if I borrow something at 5% and I'm getting, 5 to 8%, and I'm getting a 20 time return, rate of return.
Good leverage versus bad leverage, right?
Yes, absolutely.
And you said something earlier I want to harp on really quick is, people, and I hear this in the real estate side, this quote, and I love it though. And it's really those that are rich sell, those that are wealthy hold, right? And so if you can really hold, you build real wealth, right? Versus if you're forced to make an exit or you come with that mindset, yeah, you'll make some money, but you're not going to be able to build just the compoundingness of a business over time.
Yeah, and I had a mentor back. First business I did out of college I got in the bar business, and I was there all the time. Anyways, I thought as well, hey, I know how to do it, and didn't do well. But the gentleman I had kind of modeled, I worked for when I was in college, and I saw his successes. And I ran into him at the airport literally 2 months ago. I haven't seen the guy in 20 something years, and he had moved from in Austin, Texas. He had moved from 6th Street. Sold all of his businesses and moved over to 5th Street, and he created a beautiful business, restaurant, bar, everything. Just it's great. Well, when I ran into him, we started talking. He said, "What are you doing?" And I told him about Launchpad and what Equity Launchpad does. And he says, "Are you guys just flipping or are you holding?" And this guy's very, very sharp. And he told me, he said, "Look, it took about 10 years at his company, his business, to really make it all come together." He goes, "I'm now on year 26. And he's like, he goes, "Casey, my advice to you," again, this is a guy who's was a mentor when I was in college. Years later, he was like, "The buy hold strategy will pay you much better than the buy flip." That's what he told me. And then I didn't see him again. He grabbed his bags and he was off. And I was like, I don't know. He was just there to tell me about it, but it's true. It's having a long-term vision, because these businesses take time. You've got to build that time. And if you can get that time, wow, especially with an SBA loan, right? You're 10 years, right? And if you can get to that 10th year and it's free cash flow from there, and you take the Dustin mentality of like, hey, I'm going to take that free cash flow and not go buy a Lamborghini. I'm going to go buy a business instead of getting, and that's a beautiful mindset. And it kind of takes me to the whole video I was sharing with Feras last night. JD Vance just did a whole conversation about like their strategy. And I forgot the conference he was at. It was the American, whatever. It's not about who's winning or not winning or who's political side. His conversation was about bringing jobs back to America, empowering the middle class, and how we're going to do it, right? No tax on tips, no tax on overtime. The reason why we're doing tariffs is to make things more competitive and all that stuff. But for Dustin, for you and I and Feras and all of us that are buying in today, I truly, truly believe that we are the next generation of the American boom. We get to be a part of it, right? We're transitioning legacy companies. We're transitioning them to, the future. And what an honor to be a part of that, Yeah. And so it's much bigger than, like you said, the money. It's so much bigger than that. And there's a tremendous amount of risk. And we hope that the money catches up to the risk. But at the end of the day, man, we're titans of industries here on our own in America. It's pretty amazing. Pretty amazing.
Yeah, no, absolutely. I think that, God, there's so much there that you said that we could talk another 5 hours about, but
of course,
I think that there's pressure on us. I don't know how you guys feel when you take over a company, and I'm talking about some of the companies we own today. Literally, there's one that's been around for almost 100 years. The one in the Midwest in Illinois, that's a manufacturer. It's been around for almost 100 years. Another one that we have today, the aerospace distribution parts company, Fasteners, has been around for 75 years. These are second or third generations. So, this little punk guy from, LA, that's a lot of pressure. And the pressure's on ourselves. Like, look, I got to make sure this isn't just about making money. This is about, there's employees here. There are people that have been here for 20, 30 years, almost as long as I've been alive. There's family generations. Yeah, there's a lot of things that need improvement, but there's something going on here within the company, within the industry, whatever, that is the reason why it's been on for a long time.
Yeah, there's pressure to not screw it up.
And the job is, I think Charlie Munger said this, my job is not to do great. My job is just to not to screw things up. and
so true.
I think I can do that. And I think that, you know, another saying too, not to make this like a Berkshire Hathaway conference, but I think Warren Buffett also said, and I'm probably going to mess this up, like, you know, time is on the side of a good business. Time is on the side and the enemy of a bad business. So if you're truly bullish on the industry, and I'm not just talking about the companies, because let's face it, guys, and I'm sure you realize like I am, you come on board on day one when you buy this company, you know, whether it's, you know, which we have done 2 or 3 people operation or 20 to 30 employees plus, there's no process. There's no one's making outbound calls. There's no sales manager. The owner's doing even on some of these things, the owners, you know, literally I saw an owner doing calls for their own AR, accounts receivables, instead of running the business. So, you know, there's no HR, there's no policy on breaks. These companies need a lot of work, but they're successful.
Yep.
So if I could come in and just add a little bit of value there, that's going to improve the company overnight. And the thing is that, again, going back to the whole compounding thing, because I wanted to touch on this and the way I saw things about, you know, versus the short term and the long term, was that was something that really made sense to me. You know, the buy and sell thing, there's nothing wrong with that, right? I've sold assets before that have appreciated and sold them within 3 or 4 years. You know, there's tax strategies, there's all these things you've got to think about. That makes sense. But for me, to your point, Casey, was that, you know, it compounds. So I have my first business, the electronic component business. I take cash out of that business. I invest it in other things, right? Things that, you know, there was a pretty decent return, like stocks, like assets, and this and that. And then I buy my first business, and, you know, and that was a learning curve. And I took cash out of that. We had a couple of good years, and I took some cash out of that, paid down to the debt, used that money, and then went ahead and bought my third business. And then all of a sudden I refinanced a building, my building appreciated, took the capital out of that, paid cash for another business. So I have these 3 businesses, I have a couple properties, they're all generating cash. And then from there I was able to do bigger deals and bigger deals. And then that cash went back into other companies, it compounded, and it compounded. You know, I'm probably not explaining this in simplest terms, but the thing is that it happens very, very, very fast. So anyways, I just wanted to touch on the compounding part.
And before we run out of time, right? You know, I think maybe a lot of listeners are more visual like me. What was that business that you ended up buying, right? So once you kind of had freelance electronics, you kind of, came up with maybe the vision of, I'm going to go and acquire some businesses. What was that first one? You know, and maybe for the listener, I mean, how did you buy it? How did you structure it? Was it successful? How successful? Just to kind of help gauge, you know, what that first one was, and then what the next one after that was.
Yeah, that is very important for me, and I reflect back on that all the time. Look, this is and I want to say this, what I hear a lot on podcasts, what I hear a lot of people talk about, and on that, and I agree with this in a sense, is that, you know, buying a small business is as much work as buying a bigger business. So go after bigger businesses, even if you need partners, even if, you know, what is it, you know, a smaller piece of a large pie is better than one slice of a big pie, or whatever, small pie, whatever you want to say it. I'm screwing that up, but
whatever one is that.
Yeah, this is the thing. I went out and bought a small company for my first acquisition. I read that book, and I wanted to prove to myself that I could actually do this, even though I kind of knew deep down inside. So I started looking at businesses that were different than the electronics company, but not so much had synergies, but as far as the buy and sell and the type, there was overlap in the electronics and the hardware business. So I came across, so literally once I made that decision for me, guys, all I was like, okay, I came across something and I started looking at biz, buy, sell, and all those webs. And there's millions of companies on there, and I got flooded with all that. And probably within, I'm talking 3 or 4 months, once I was serious about doing this thing, I came across a business out here in Southern California, really close by, geography wise. And it was a 3 or 4 person operation, family business, been around for a long time. It was one company at one time. So it was a manufacturer of fasteners. And what they did is the family broke off between the siblings, and one sibling got the smaller distribution part. So instead of making fasteners, they sold fasteners, you distributed them, and the other one was a manufacturer. So it was small. We're talking small. We're talking it was doing anywhere from like 600,000 to like 800,000 or 900,000 in revenue, right? It had a couple down years. There was literally 3 people working in the business, and then a family owner. And I saw it come up. I read it in Biz Buy Sell, and I'm like, oh my gosh, this is like perfect, because I've always was fascinated with fastener companies, right? Because I thought it was a very hard business to understand. So I called the broker like religiously. I didn't get a call back. And that's one of the things we hear about, right? Like they don't call me back. And I'm like, no, I called him and I got the lady on the phone. I go, look, I know, I kind of understand this business. I'm kind of doing the same thing in my other business. I wanted, I didn't know any idea, I didn't have any really clue on what to do, right? How the whole process went. So I didn't have like an attorney. I didn't have another broker. I just winged it. And so I went in there, talked to the owners, talked to some of the key staff, and I made an offer. And the way I structured the deal, because it wasn't that profitable at that time, was that I did 50% seller financing. Again, this was very unusual. This is not something that happens all the time. So I did 50% financing. I believe I paid, I want to say all in total for that business, which is probably a little bit of a high multiple at that time. If you look at what it was really cash flowing, seller discretionary earnings was probably 150 to 200,000 approximately. Okay. So I ended up paying about 475,000 or something like that with 50% seller financing. That included some receivables. So I think I got like I bought some receivables, but I got like the first 50 or 75,000 of receivables and then bought the rest of them for a discount. But what was really key in that business, what I understood from my background, was the inventory was very undervalued. There was $1 million worth of inventory. It was very undervalued. I looked at it and said, you know what, I think we could, possibly resell this at a higher price. So that's how I structured the deal. It was basically 3 people and the owner, and I came in there on day 1 myself. And basically was like, okay, here we go. And I just tried, again, there was no real game plan. I had a few of my staff that I brought up. Basically, I had this holding company. I had my electronics company, and that was it. And the holding company was just really on paper. So that's kind of what happened on day 1. But yeah, seller financing, it was the terms on that deal was, I think it was 5 years. So I financed the 250,000 or something, whatever happened, 5 years on a fixed rate of like 7%, very small. And I ended up actually paying it off and I think it was like 2 or 3 years. So that was the first deal. And boy, did I learn a lot. I learned a lot. It was really, really, really tough.
What I'll tell you, just to kind of piggyback on that, so we as a team went out and acquired in 2023 a big business, or I'd say lower middle market, 25 million revenue business. And it's been
about 170 employees, which is
a lot. I mean, so call it whatever you want. Really hard. I mean, it's difficult. It's all the things, 3 divisions. I highly would suggest anybody that's listening to this right now, not do that on your first deal. Like, I think what Dustin did on his first deal is the right thing. Because what happens is that if you're learning how to be an entrepreneur and run a business, that's one thing. You were already an entrepreneur, Dustin. Now you've got to learn how to be the guy that acquires a business, helps change culture, get that business back on track. And it's a whole nother skill set. It's different than, this was a business my father and I started and kicked it off, and people come in and they work for you and there's loyalty and there's all that. Now you got to go in and you got to get their loyalty. And you got to get a small mass moving in the right direction. To me, there's no right or wrong way. right? I just
Right.
think that at the end of the day, this is very hard. It doesn't matter if you buy a 3-man group or you buy a 170 employee group, buying and transitioning and that process comes with a tremendous amount of skills that a lot of us just don't have, right?
And
Like you,
patience.
Dustin, I didn't go to an Ivy League. I went to college, but I think I went to a party. And, I did understand accounting, but I figured out accounting in my first business when I totally did everything wrong. It's like, that's the beauty of what we're doing and getting in and doing it. So again, just kind of piggybacking what you said in your first business, it's like, find what works for you, but do not be concerned about size. My wife has been saying that for a very long time. No, but the idea is that, hey, I am going to get into the game. I'm going to learn how to do it. Like you said, prove it to myself. And so for our listeners, I agree with Dustin. It's like, if you're going to do it, go learn, get the skill sets, especially most of the guys I talk to in their 20s, early 30s. And I'm like, man, there's no need for you to go slug down a $5 million SBA note if you've never run a business before and you're getting into this. That is just unnecessary risk, especially at 10% interest rates. It's crazy times. Find a deal, find a place you can put some cash in, owner finance. That's the deals that I think are the winners today, Dustin.
Yeah, get your hands dirty. Work in the business like you don't know anything. And really that was, and still today, that is really kind of the high of doing what we're doing is, really learning something and going, oh my gosh, I didn't know this was a business. Or, wow, they're doing something. And I'm sure you find this in your business, like we're doing a service or we're doing something that is really important for the economy. Or, I'm flying on an airplane and I'm, thinking, especially nowadays, like, I hope we're going to land okay. But I'm like, wow, our parts are on this airplane. Like, these are things
awesome.
that are really cool. But going back, like, to what you're talking about, like, if I would have talked to, somebody that was buying other businesses at that time when I bought my first business, they would have probably told me, you've been running a business for a while. You know the basics of accounting. You understand financing, whatever. Buy a bigger business. Just go out. You don't need to do that. And for me, it was like, I'm glad that I had a little bit of that imposter syndrome. I just had to figure it out on my own. And what I learned from that process, it wasn't just after you do that first deal, okay, and you decide, wow, I want to keep doing this. I want to grow this. I like the HoldCo model, or maybe I just want to buy a few people and do roll-ups and then get rid of them later on. That's fine. But what you find out is that running the business and growing the business is one thing. But the key that I got when I started talking to other brokers, when I started talking to other owners, and again, there's a million ways to find businesses nowadays, but when you start talking to other people, what they really want to know, for those people that are like, oh my gosh, I called 50 brokers and I didn't get a call back. Or I talked to an owner, he wants to sell to me, but he has 3 other owners that are trying to buy this business and I didn't get the business. In my opinion, after doing 5 or actually 6 deals now, right? Which I acquired. 2 of them have been rolled up recently, but after doing 6 deals, small, but 6 deals, what they really want to understand is, do you know how to go through the process of getting a deal done? Buying the business, I could run the business. But as you guys know, when you start, LOI to negotiating with the seller, to due diligence, to the financing piece, to closing is a tremendous feat. And
It's a lot of work.
what I learned was to try to not perfect, but get better, not just with myself, but my team. And put a team together, put a process together on how to get a deal done. So when I call a broker or an owner, I'm going to get a phone call back, or they're going to want to deal with, because, it's a lot of times when you deal with the broker, it's about price, but sometimes it's not. What they really want to understand is, can you get the deal done? And that's where you get better. That's my biggest piece of advice for somebody that's doing this for the first time. That's why buying a couple of those small companies wasn't about just running the company, but how do I get the deal done? How do I, how am I going to deal with when I get 5 LOIs, one comes through, I've been working on it for 6 months, and then I get to another 6 months and it falls through? How are you going to respond with that? How are you going to respond when they tell you no, or when the bank SBA loans, as you guys know, it's better getting a prostate exam than than getting an SBA loan. It is grueling.
No, as an
You have to
entrepreneur,
know how to go through that process.
you have to deal with adversity. I mean, that happens. It's part of the game, and you have to be the person to not, just completely toss your hands up and give up on everything, right? It's about, okay, here's a challenge. Here are the possible solutions. Pick something, keep moving forward. And it's just about constantly moving the boulder forward. And, really quick, Dustin, before we move on, because I know we're running out of time, that first business you bought, what was the next business? Like, give the 20-second pitch, because usually it's that one that you learn and take all those lessons and, find the thing that really starts to accelerate.
The next business was a very similar company. It was in the state of Washington, right? So far away. I'm running it remote, another small business, but it had an element to it that I really liked, and it was serving local manufacturers. So it was basically like a company that comes to your warehouse every day, like you guys. You guys are a manufacturer and say, hey, what do you guys need? Do you need gloves? Do you need, PPE supplies? Do you need abrasives? We sell it all, right? We also do a lot. So we do like bin stock, kind of like a Fastenal, but on a smaller. So they serve local manufacturers. I like the business. What was very key on that business that I still have today, right? It's just a small little business. What I learned differently from my first business was the culture. And that you had a culture that was so different at the first business, run by an owner in a family business that really ran everything by fear. They didn't trust me in the beginning. They didn't trust their employees. I go to this other business, and the owner was an absentee owner, and the employees there had a lot of trust in each other, and they had a lot of autonomy. And when I talked to the employee, I literally and could say to today, these three people are like, they're like the Beatles, without the fourth person. They are awesome. And they are the best team that I ever encountered. And I bought the business for them. And that's what it really taught me. It was like, it's making a little bit of money, but it was really that experience that I got of how important it is, the culture. And when you're buying smaller businesses, that one employee leaves, or if there's a toxic employee, it could sink the entire company. So that was really a lesson for me that, look, I could keep this company because it has a good staff, and I could probably grow it because I have the right pieces there.
Love it, man. Very good. Congratulations to all that success, Dustin. I really think it's amazing. So right now we're going to jump into our rocket round. This is when we ask our guests 3 questions and to learn a little bit more. So Dustin, I'm going to kick it off. So what do you like best to do in your free time?
I'm an outdoors person. I love to fish. I like being on the ocean. So I go on a boat like for 2 weeks out of the year, and we catch big tuna. I like to hike, like to go up to the Sierras of the mountains. So outdoor person, it's, I take a trip by myself once a year to the mountains, just escape, get off the grid. It's very, very vital for business and for health and for my personal life.
Awesome. And next question, most memorable moment in your business journey?
So we didn't really get into the other businesses too much, the bigger businesses, but it's my most recent larger acquisition. It's Gates Washer in Illinois, and that company makes a lot of washers. It's a machine shop, and the day one that I bought it, it's a like you guys, it's a big 35,000, 40,000 square feet building and so forth. Yours is probably a lot larger, thousands of employees. And I was walking in there after I closed on the building and the business, and I saw this area of containers of scrap metal, brass, copper, stainless steel, and steel. And I got nostalgic, and I thought about, oh my gosh, when I was a kid, I would go to companies like this and buy their scrap metal with my dad. And those barrels of metal were like the my gold back then. And now I'm actually owner of a company that is generating that scrap. And again, it wasn't a money thing. It was just like, it's kind of like full circle. It's
when those dots connect.
Destination. And it was just amazing. A feeling. Amazing. And it's like, wow, this is why I do this. My dad is no longer around, would be very happy about this because he loved metal. You love metal. So
that's incredible. Love it. All right. Last question. What is your favorite tool or resource?
So I got to tell you, I think this is a double-edged sword. It could be our very distractive resource and it could be our best resource. But for me, it's really the phone and the iPhone or whatever phone you have. And a subcomponent of that for me is really going to be podcasts and podcasts like yours. There are a million podcasts out there about M&A, about everything in life, self-help. I mean, I can name them all. I'm sure you guys all heard of them. I'm telling you, for me, for somebody that hasn't gone to college, it's an MBA. It's so much stuff that I learned about people's experiences, advice that I've got. I mean, I have literally made decisions and financial decisions, have had success from people's stories and what I've heard. And the thing I like about your guys' podcasts and things like this is because a lot of the people that get interviewed are very honest. You know, they're people are not coming on your podcast and bragging about how much money they made or how awesome they are. They really talk about their struggles. And I think for people that are buying businesses and entrepreneurs, we need to hear the wins are easy. It's the losses that we really grow from, but it's within that you realize. If I could share about my story sometimes and say, hey, you know, I was a troubled teen and I could write a book about that, but I made a lot of mistakes as a youngster. Hopefully somebody hears that and gets something, goes, hey, maybe I can do it. If this dummy can do it, maybe I can do it. So I think podcasts. And the second thing I'll say real quick, AI and ChatGPT. It has transformed the way I get stuff done. It's unbelievable how much more productive I am.
Awesome. Good. Love it. Dustin, how can people get a hold of you?
So I think I have an X/Twitter account, but I don't tweet anything. I have like 10 followers. That's probably not a good place, but I am on LinkedIn. I'm somewhat
busy buying businesses. I get it.
Yeah. Yeah. So I Dustin Carreon. I have a LinkedIn account, so I am somewhat active on there. I post stuff about my businesses or stuff about just entrepreneurship and so forth. My email is dustinc@coiholdings.com, or you could find me at COI Holdings, which is my holding company, coiholdings.org.
Awesome.
Beautiful. Dustin, incredible story, man. It gives our listeners a whole different perspective on how to build wealth and be an empire builder in this business without, going out and raising a bunch of capital. So thank you for sharing with us today.
Thanks, guys.
I loved it. Thank you very much, Dustin.
This was great. This was fun. Thanks, guys.
Thank you for listening to the M&A Launchpad Podcast. If you've enjoyed today's podcast and would like to support us, please leave us a rating and a review after you listen. I'm Casey Minshew, and I look forward to talking with you next week.